Hi, everybody, and welcome to our webinar, How to Navigate Invoicing and the Reporting Requirements. As people are still joining, I'm going to first just give you a few tips about the platform and how the webinar is going to go, and then I'm going to introduce the speakers, a little bit about the topic and all. So first of all, we're going to have a Q&A session at the end of the webinar, so please feel free to send questions throughout the whole presentation or at the end when we have the time for the Q&A session. In case we don't manage to answer some questions, we will, of course, send them to you after, or you can always email any of us. Another thing is that throughout the webinar, we're going to have some polls, so we kind of break the ice. We also give you a little bit of a time to have a break and also to make it a bit more interactive. And now that I see that more people have joined, also feel free to put any comments or in the chat area down at the right. So what are we going to talk about today? Today, we're going to talk about invoicing, as you can see, and as you can see from the title. We're going to see a little bit about compliance, what are the latest news, what's going on, not just in Europe, but also overall in the world. We're going to have some focus on certain countries, and of course, we're going to go through the various different models of invoicing, different challenges that there are, and how you as a company can kind of overcome these challenges and kind of have a streamlined process of invoicing compliance. So just to a bit introduce the speakers today, I'm going to be moderating the webinar. As I said, my name is Katja, and I'm a business solution manager at Comark for the past 3.5, almost 4 years. And with me today, we have Ellen Kortblind, who is a partner and leader in PwC Center of Excellence in Invoicing and in Reporting, and has over 15 years of experience in invoicing and reporting. So she's going to share some very valuable information with us. And we also have Rafał Trianowski, analyst and invoicing expert at Comark, who is also very knowledgeable on legal compliance and implementation, and is a big support at Comark for legal requirements. So now we're going to have our first poll quickly to sort of break a bit the ice. So as you can see, there is a pop-up, and we're going to focus on which regions you're planning to implement e-invoicing or e-reporting. So feel free to either skip the poll or even share some comments in the chat. And interestingly, for the poll, as we can see for now, most people said that they're interested in Europe. So that's, of course, because the latest regulations are here. We have quite a few results, so I'm going to leave the stage now to Ellen. Ellen, thank you, and it's your time.
Thank you so much, Katja. Hello, everyone. Also, very warm welcome from my side to this webinar. So it's good to see that many of you are interested in the latest developments in the European region when it comes to invoicing. So we will try to focus a bit on that as part of what we will explain during the webinar today. But before going into the details, let me shed a bit of background to the topic. First of all, it's very clear that e-invoicing and e-reporting obligations are still very much on the rise. If we look at the global picture around e-invoicing, e-reporting obligations, and when I'm talking about e-invoicing, e-reporting, I make the distinction between mandatory electronic invoicing, meaning a process whereby you are obliged to send or exchange invoices in electronic format. Mostly that format has been predefined by the tax authorities, and often you are even obliged in such a model to send over your invoices via a government-run platform. So you see that the government has, I would say, a prominent place in the middle of your invoicing process in this type of model. When I'm talking about e-reporting obligations, I'm making reference both to real-time reporting obligations. That means a bit similar as compared to mandatory e-invoicing, so meaning the invoice information is being exchanged with a government entity. But timing-wise, this is happening after issuance of the invoice. And then, of course, a third category, not exactly the same as the two others in terms of nature of the data that will be reported, that are the on-request e-audit requirements, where accounting information is also sent in a structured format towards governments. So you can see, if you look at the global picture, as I mentioned, since 2023, and how it will change by 2028, you will definitely see a very large increase of new obligations that are being imposed, basically in all the different categories. So in the mandatory e-invoicing obligations, both and especially with respect to business transactions, but also with respect to business to government transactions, where you can see that governments still very much want to lead by example by making it mandatory in case you want to do business with a government entity in those countries to send your invoices in electronic format. But also more and more in a B2C environment, where you also see a clear increase in the number of requirements that require you to send also, in this case, your invoice in an electronic format. Another very important trend that is already briefly highlighted here, but where I will explain much more details later, is of course a specific proposal that has been issued on EU level. It's called the VIDA proposal, VAT in the Digital Age, whereby if this proposal would indeed be approved as is, all EU member states will have to comply with that new regulation, and e-invoicing and real-time reporting will basically become the norm for intra-community trade. But more on that later. So knowing all of this, we know e-invoicing, e-reporting still very much the focus of many governments around the globe. How are they now implementing these types of models? Well, I think it's fair to say that what all of these models have in common is that none of them is implemented in precisely the same shape and form. But if we try to categorize the different requirements that we see popping up globally, I think this overview slide is giving a good impression of the different models that countries are looking into or have already implemented. I will briefly touch upon them, but Rafael later on will take you through much more detail in terms of what this practically mean, what these models practically mean for the exchange model of your invoices. So if you go from left to right, the first model that has been highlighted here is the so-called interoperability model, whereby taxpayer recipients, supplier and buyer, make use of specific software solutions, so-called access point providers, in order to exchange their invoices in a very streamlined manner based on a predefined set of rules and agreements that facilitate, let's say, the exchange process between these parties. Here, the PEPL model, PEPL short for Pan-European Public Procurement Online, which was originally established in the EU for, let's say, B2G transactions, but where you see that this process is being used more and more also for B2B type of transactions. The next one, that's more a reporting model, real-time reporting, a model that has already been implemented in countries like Hungary, Spain with the SII reporting, but also in South Korea, whereby after issuance of the invoice, as you can see in flow 1, the taxpayer is also exchanging a specific set of information around that transaction with the tax authority for further audit and control. The third model is the clearance model, a model that has been already very widely used in the Latin American region, where you can see that before being able to send an invoice by a taxpayer to its recipient, it needs to receive a good-to-go kind of confirmation from the authority. So a clearance process is in place, whereby a tax authority is really checking whether the invoice meets all the predefined controls and obligations before actually being able to send this one out to a buyer, and whereby a buyer can also have a similar obligation to validate its received invoice with the tax authority in the next step. The next model that is being highlighted here is the centralized exchange model. If you're active in Italy, this will definitely ring a bell. It's also often called a distribution-based model, whereby indeed a tax authority is not only the one who is clearing your invoice and receiving or providing you a good-to-go message before you can send the invoice towards your recipient, but it's also the tax authority who is actually the responsible party for sending, for distributing your invoice towards your recipient. And then the last model on the slide that is called the DCTCE model, so the Decentralized Continuous Transaction Controls and Exchange model, is a model that is proposed by a number of stakeholders and, for instance, also by PwC. Whereby you could basically say it combines a bit the best of both worlds. It is focused on giving a clear interoperability framework, as you saw in the first pillar here, but whereby the software solutions that are being used for the exchange of documents also have the responsibility of sending the specific information that a tax authority wants to receive in order to perform its audit function, its control function as part of that process, but without, let's say, creating a dependency in the exchange model that is happening between the two access point providers or software solutions. So that, in a nutshell, in respect to the different CTC models that we see being implemented globally. If I then move further, I explained in the beginning, there's a lot of change happening. We see more and more countries that are indeed looking into the implementation of the one or the other model. What we highlight here is basically a very detailed overview, a watch list of the different requirements that are coming your way globally in the different subcategories that I explained about before. Where you can see that for Europe, and I'm sure we will touch upon that later as well, you see very big economies moving towards the implementation of an electronic invoicing process, with France, with Poland, both implementing B2B mandatory e-invoicing by July 24. But also other countries more recently receiving the confirmation from the European Commission that they are allowed to implement a B2B e-invoicing process. Think about Romania, think about Germany, who both received that confirmation from the Commission. And then also Spain has very recently shared the technical specifications of its intended B2B e-invoicing model. So all in all, for the ones, and you clearly indicated that as part of the poll, you're interested in Europe. Well, there is definitely a lot going on in this area in Europe nowadays. Even more so, and I already alluded to it in the beginning, even more so because there is also an important policy initiative worth mentioning happening in Europe. So the VIDA, VAT in the Digital Age proposal, which is really an initiative from the European Commission to harmonize the electronic invoicing framework and the digital reporting framework for all EU member states. So it is a proposal that has been issued end of last year, so December 2022, where basically changes have been introduced in two big categories. First of all, changes to the electronic invoicing process. Secondly, the introduction of a so-called digital reporting requirements. What does it mean in practice? First of all, looking into the changes to electronic invoicing, you can see that the proposal is introducing a new definition of what needs to be considered as an electronic invoice. Where in the past, the definition was merely referring to the fact that you are sending or receiving invoices by electronic means. As from based on the proposal, January 2024, an electronic invoice will only be considered electronic if it is issued in a structured format, allowing for its automatic processing on the recipient end. So this, of course, in itself is already a very important change that is being introduced by this proposal. Secondly, that is even more impactful, there are also changes being introduced to the concept of the invoice. I mentioned before the fact that basically as a company, you have yourself the possibility to decide how you will send your invoice in a non-mandated situation, meaning you can either decide to send your invoice on paper, or you can use electronic invoicing according to the previous definition. In the future, based on this FIDA proposal, as from January 2028, structured electronic invoicing will become the norm. It will become the default system for the issuance of invoices for all intra-community trades. However, member states will have, based on this proposal, also have the possibility to go a step further and also introduce e-invoicing as the norm, as the default process for the domestic transactions as well. So again here, very big impact if going forward, it will become mandatory, a mandatory process to send invoices in electronic format for all your intra-community trades. Why are they doing that? Why are they introducing this obligation, basically? That links with what you see on the right side of the slide, namely the introduction of a digital reporting requirement for intra-community transactions. So nowadays, if you look at your intra-community trades, the way you need to report on that trade as part of your standard VAT returns, well, you can see that you have recap statements, either a purchase listing, an acquisition listing, or an EC sales listing, and or let's say where you will find all the intra-community transactions summarized in an aggregated manner as part of that statement. Going forward with the FIDA proposal, this recap statement will be replaced by a digital reporting requirement, meaning information that needs to be transmitted on a transaction-by-transaction basis instead of the previous aggregated way of reporting. And there are also new information, new fields that are specifically being added in order to, let's say, be better placed, be better weaponed to detect any intra-community frauds. Where in the past, the reporting of information on the acquisitions was only optional, let's say, only if certain member states have decided to implement that reporting, it was indeed in place. But going forward, also the reporting of information on acquisition side will become mandatory. And again, this will be a transactional reporting instead of the aggregated reporting. However, an important side remark, this is still a proposal. So it's still undergoing a lot of political discussion nowadays. We've heard about the feedback in the latest ECOFIN meeting, where you see that not all member states are absolutely aligned on all the concepts that are being introduced here. Also not on the timing, because there are some changes that are already implemented or have to be implemented as from January 2024. So that is pretty short notice if you look at where we are today. So timing-wise, also on, I would say, some of the fundamental aspects that are part of the proposal, there is still discussion going on. So it's very, I would say, I would very much recommend to follow up on what is happening with FIDA and really assess the impact that it may have to your business going forward. So that is on FIDA, the changes, the watch list. What are now, based on, let's say, this changing environments, based on the numerous requirements that are heading your way in the future, the top 5 business challenges that we see with the clients that we're talking to. First of all, given the magnitude of changes, given the number of changes that are happening, it's clear that not all businesses have a clear view on the obligations. So, as I mentioned, the regulatory environment is very complex. It is challenging to keep up with everything as it is changing. It's not because you have implemented a certain requirement once that it is no longer subject to change. No, unfortunately, changes keep on happening in relation to the scope, in relation to the technical details. So it is very, it is very much needed to have indeed the appropriate time, resources available to follow up on everything that is changing and assessing the impact that it has to your business in order to make sure that you remain compliant, because that is, of course, a must-have situation. The second business challenge that we see very much popping up when talking to our clients is the fact that, and you saw that with the different models as well, there is still a high level of fragmentation going on. Despite the harmonization efforts in the EU, you can still see that each country is introducing its unique obligations, which of course also have an impact to the changes that are needed to respond to those specific requirements and obligations from a systems, from a process, and from a people perspective. A third element is the fact that given the number of changes happening, given the fragmentation, that many businesses have until now really relied on local teams, local solutions to deal with the country-specific e-invoicing and e-reporting obligations. However, based on the magnitude of changes happening, based on the number of requirements on the roadmap, we really feel that that strategy is no longer sustainable for the future. And we see many businesses nowadays really rethinking their strategy and going for a more centralized, a more holistic, a more global approach towards these trends with respect to e-invoicing and e-reporting. Another important challenge is, of course, the fact that you cannot look at these obligations in isolation, meaning you need to look at, I would say, the broader picture and where your invoicing, your e-reporting process really fits within your wider ecosystem, within your wider environment, and how it all ties together. So you really need to connect compliance to the bigger picture, as we mentioned here. And then the fifth important challenge that you need to think about is, of course, the fact that when looking at an invoicing process, a mandated electronic invoicing obligation, it is not just about a specific compliance obligation. It is being able to operate in a country. It is being able to secure your cash position in a country, meaning that the number of stakeholders that are involved in such a process to make sure that all of that is running in compliance in a good manner. That means that you need to involve a larger set of stakeholders, obtain their buy-in in order to come to a successful implementation going forwards. Maybe before I hand it back over to Katja and Rafael, some last words from my side. I mentioned a lot of complexity. Of course, it's not all negative. We are definitely here to support you, and holding this webinar is one of the means, of course, where we really try to guide you to obtain a future-proof response to the changes that are happening. And I think it is very much our attention point to focus on having an end-to-end overall global compliance strategy in place, whereby, first of all, you clearly have a way to understand the current and future obligations, have a really good visibility on how these obligations will impact your unique business situation based on things like your customer channels, your transactions in scope, your existing overall technical framework, and things like that. Really assess the impact to your current environments, define your ambition level to deal with these types of requirements, and at a global or at a regional level rather than on a local to local manner. Design your target environment with, again, a focus on having a centralized data hub, global solutions in place to deal with the different requirements. And then, of course, make sure that you standardize your approach in order to avoid that each and every new obligation that pops up, that a separate project needs to restart from scratch, but that you can really realize synergies throughout the different implementations with the strong support of third-party relationships that really offer that global experience and that global support. So I think with that, Katja, I can hand it back over to you for another poll, if I'm not mistaken.
Yes, thank you very much, Ellen. Ellen was correct. And shortly, you're going to have a little pop-up with some new questions for our poll. So we're kind of looking to understand why this webinar particularly interested you. What was it that attracted you? I can see that also everybody is very active in the chat. So as I said earlier, we're going to do our best to answer all the questions, and we of course will send you after that the answers to all the questions we're going to collect today. And I see that everybody's mostly collecting information today. I hope you're finding everything informative, and without further ado, I leave you now to Rafael.
Thank you, Katja. And just to make sure, is my screen visible?
Yes.
Perfect. So the following part is actually useful for both those who prepare for e-invoicing projects, as well as those collecting information, because the idea is to bring you closer the technical challenges as well. We all know that currently we have a wave of new digital reporting requirements. They are popping up basically all over the world. And thanks to Ellen, we are now also more familiar with the different types of the so-called continuous transaction controls models, as beautifully presented on the slide with the 5 different schemes with well-structured terminology as well. But I always find it useful to introduce complex topics by oversimplifying at first and showing a high-level perspective. Moving pictures definitely help with that. Those flying invoices kind of speak to the imagination a bit better and help getting a better understanding. So starting from the top of the screen, the simplest idea a government can come up with to get more control over the taxpayers' transactions is basically have them send everything through one central platform. It works as the example of Italy proved, and therefore some countries definitely will try and follow. Poland being, of course, one of them already, with the mandate coming up probably in July next year. It is probably not the most business-friendly model, though, as we will see later on. Kind of a different approach, but surely with the same aim, real-time or near real-time reporting on the left side of the screen, where you are usually free to send the invoice to the receiver however you wish, sometimes even on paper. Perfect example would be Hungary, where it's perfectly okay to send invoices on paper, but you have to report them to the central platform. The data report from the invoice has to be reported either in parallel or shortly after. We also have clearance system on the right side on the screen, where the invoice needs to be cleared by the authorities, and only after it gets some kind of stamp or signature or code, it becomes a valid invoice which can be sent to the recipient. And we also have different variation of the system. So those 5 models, those 4 here, this is by far not everything which is possible. We can mix it up basically however we wish. One example would be for to make to introduce some accreditation process for service providers. A perfect example of a mix is the hybrid model, which is currently being introduced in France. It is a bit more sophisticated, since the idea is to provide the taxpayers with alternative ways to send an invoice. One of them being a network of certified providers, similar as we have it in Finland right now, but without the involvement of the government. And the second possibility is to use a governmental centralized exchange where you can send the invoices through, similar as in Poland, similar as in Italy. So this is the idea which gives the taxpayer some alternatives, basically whatever suits them best. Therefore, a bit more taxpayer friendly. So this was like the high-level overview of what can be expected in the coming years in all over the world. But let's continue with some terminology which has to be explained in order to understand the challenges which are connected to implementations in the field of e-reporting or e-invoicing. And I divided this slide into 5 sections to better group the important terms. First of all, on the left, we have the stakeholders which occur in any e-invoicing or e-reporting implementation. We obviously have the document issuer, no matter if report or invoice. We have the invoice recipients. We have the tax authority, which is interested in gaining more control over the taxpayers' transactions. And we have IT service providers who are acting as the entity who helps you to guide through the technical challenges connected to the mandates. But then we have the next group, the so-called structured invoices, which are electronic invoices, but not PDF files. It has to be structured data containing the mandatory elements an invoice is made of. We have an important term, which is the European norm, which was very widely used for quite some time already in the public procurement area, and is now slowly spreading to the B2B world. This is basically the norm contains a semantic data model for electronic invoices, which, as I said, was developed for B2G purposes, but will be adjusted as well in the future to B2B purposes as well. So it is more or less a structured set of information. The syntax is more or less a structured set of information contained in the invoice. And there are 2 syntaxes which are compliant with the European norm, and they are representing the requirements, the semantic requirements of the norm. So it's basically a machine-readable format. On top of that, we have also the so-called core invoice usage specification, which narrows down certain fields for certain use cases, and they can differ from country to country. We also have extensions which can, for example, add entirely new business terms which were not yet covered, which might, for example, be needed in some country's tax regime. A perfect example would be the German X-Rechnung. The next group is all about transmission. So we also have different ways of transmitting the structured invoice. It can be done using the so-called 4-corner model, which is mainly known thanks to PayPal. It's a brilliant idea. We have multiple web services or platforms with API connections. We have interoperability agreements between service providers, and we also have other ways, even emails with structured attachments. This is still fine. However, I definitely wouldn't recommend. The service providers have to take on multiple technical measures, and the important terms here are for sure the mapping of invoices, which is basically all about converting one document format to another, subject to the constraints imposed by this format. We have the schematron, which is a set of validations, and we have the schema, which is a specification, otherwise a document structure in the form of an XSD file. We also have the secure communication channels, for example, SFTP or AS2. Then we have the terms which fall into the category that tax compliance, such as providing the audit trail, which is all about making sure there is evidence of the sequence of activities in the context of tax relevant documents. We have terms such as authenticity, integrity, readability of the invoice, which are key elements for properly maintaining and storing tax relevant documents. We have the digital reporting requirements, which are imposed by governments, already mentioned by Ellen, which need to be followed, such as, for example, the deadline in France or in Poland. So knowing this, we can more or less answer the question where the tax elements meet the technical elements. And what you can see here is just a set of examples. There are many more. So starting from the top, one of them is the need to map the invoices following the validation rules required by the tax authorities. We have to ensure no data is lost. We have to apply the correct schematron rules for the correct format, for the correct syntax. Then we have to transmit the invoice to the correct receiver or platform, which means that we have to apply the correct authorization mechanism. For example, the open authorization in Romania, or the token authorization in Poland right now, which is probably going to be changed a bit. And we have to use secure communication channel to make sure that the invoices won't be modified by any third parties. We also have to take care of the requirements set out for the invoice management, which means we have to provide proper documentation, such as, for example, the GeoBD documentation in Germany, which is basically a handbook for the tax controllers to better understand the process. As I said, there are plenty more points where the tax challenges meet the technical challenges. So this is by far not everything. This is all still quite high level, but we only have a limited time, and therefore I'd like to continue with a brief summary what has to be considered during e-invoicing or e-reporting implementation. So first of all, we have to conduct a detailed analysis of the local landscape, which includes both analyzing the legal requirements, the law basically, and the technical requirements, so specifications and connectivity documentation as well. So when it comes to those legal requirements, we have to determine what, for example, we have to determine what data needs to be transmitted, what fields are mandatory, what are the deadlines, which business process has to be issued using which platform. So those are all things which need to be analyzed. And then we have the technical aspects as well, such as, for example, does the invoice need to be signed, which is probably going to happen in Spain? Do we have to apply some QR code, which is probably going to happen in Poland? So there are many aspects which have to be considered during the analysis of the implementation. Next, we have the challenges. Some of them more obvious, some of them less obvious, but all worth mentioning. So it is obvious that the complexity of a country's solution might be a challenge, but we kind of already said that. One big challenge is that the requirements, the documentation is not always available in English. So local presence is definitely an advantage. And even if you have it, it's quite challenging as well. It took us a while, for example, to get a certified to become a certified provider in Thailand, despite having a local office. So it was really quite a challenge. Quite often, the authorities, the politicians impose very tight deadlines, which are hard to meet by the governmental entities responsible for the implementation, which means that they very often issue incomplete specification because they are really in a hurry. They have limited resources. So this happens almost in every country. And this leads to the fact that there are many open issues and questions. So the authorities become overflooded with questions and are not able to respond to all of them, which also means that you have to be creative, and having a team which is already has some experience in other countries can kind of guess a bit is for sure helpful. For the very same reason that the resources on the governmental side are often limited, the government platforms are technically immature, which means that there are going to be many errors, especially in the beginning, because the solutions are not really tested too well because of some tight deadlines. And another thing is that an incomplete or not properly working solution means that there are going to be some changes. And in the worst case scenario, they are not going to be announced, which is also very challenging, especially for the technical teams, which suddenly face new solutions which they have to adapt to. So quite difficult case. So there are also some business challenges. I'm not going to mention all of them, but for example, displaying business processes, tax processes, following the rules and validations which apply to the structured invoices causes problems. For example, what was super easy to write down on paper becomes quite hard if it has to pass the validation rules, which sometimes also contain small mistakes. So this has to be kept in mind, that it's not like one-to-one what can be displayed on paper will be easy to display on a structured invoice. Also, ensuring the high quality of data, which is problematic due to the fact that for the government, not all fields which are important to businesses are going to be important as well, which means that they are probably not going to be mandatory, and therefore there might not occur on the invoice, which is a problem for the taxpayers as well. But with all the problems, there are also some advantages. Most of all, it is an opportunity to automate complex invoicing processes and therefore reduce costs. It is also a huge environmental impact, which is important as well. And it also decreases the likelihood of invoice disputes. So there are also business opportunities which are connected to the implementation of e-invoicing processes, no matter if they are enforced by the government or not. And knowing all this, I would like to once more pass on to Katja and Ellen, since we are now going to discuss some countries with e-invoicing plans, one of them being Belgium, mainly because it is not only a very interesting development, but also because Ellen is close to the tax authorities and might give us some proper inside knowledge. And later on, Katja is going to do a quick poll, which will enable you to choose the next country to be presented by me. So Ellen, if you could please take over.
Of course. Thank you, Rafael. So indeed, a few words on the upcoming obligations for the Belgian market, which is indeed close to, well, home and my heart, of course, in terms of developments. Just as a recap, Belgium, as part of its wider tax reform, has indeed announced that it would also implement mandatory e-invoicing in combination with an e-reporting obligation. This is, of course, all subject to political negotiation, political discussion, which is very much, if you're following the news in Belgium a bit, very much going on at this point in time. What is currently on the table, and I mentioned this with a lot of caveats, let's say, based on that political decision process, which is still happening, is that indeed Belgium will move into mandatory e-invoicing based on PEPL. This will be initiated based on the earlier mentioned timelines as from January 2024 for the ability to receive invoices over PEPL, and then in a phased manner based on the size of the company as from July 2024 for sending of electronic invoices via the PEPL network. However, I say this again with a lot of caveats, knowing that we're already July 2023. I am quite certain that these timelines may move a bit further in time, that the January 2024 is no longer completely realistic, let's say. But we'll have to wait on what comes out of the political discussions, which we are hopefully expecting to receive by the 21st of July, because that's the ultimate deadline before they go on a summer break, basically, to receive more guidance on what that will imply. The second big element of the reform is linked to mandatory e-reporting. And you may see that there is a distinction in terms of scope between mandatory e-invoicing and mandatory e-reporting. So the mandatory e-invoicing, that is affecting all Belgian established companies, whereas the e-reporting process goes a step further and is also affecting Belgian VAT registered businesses. So even if you're not established in Belgium, but have a VAT registration, you are potentially also part of the scope of the e-reporting process. Based again on the previous announced timelines, this will be implemented as from January 2026. So you see a very big impact if this is being implemented within these short time frames, especially. However, what is very good about the Belgian mandate is that it relies on an international standard. PEPL has already been mentioned numerous times throughout this presentation. And the good thing is as well that you can already start preparing for what is coming. So PEPL is very much available already to be implemented for your B2B processes. So you can already start early with this process and should not per se wait for the ultimate guidelines to be published by the Belgian authorities. So these are just a few words or a few updates on the current situation in Belgium. So I think, Katja, that brings us back to you.
Yes, thank you very much. Yeah, PEPL is indeed something that started and then now it's gone all over the world. So we're kind of curious. We're going to launch a poll to which country you would like to see next. We wanted to make this a little bit more interactive, give you the freedom to choose. So you can choose from France, Poland, Malaysia, and Australia. I saw in the chat a lot of questions about Poland, but you can choose from either of these. So you can go ahead and then we'll announce the results for Rafa so he can select. So far, Poland is leading.
Okay, so
yeah, we have 42% for Poland and 31% for France. So
this was kind of expected. Because those are the most hot topics right now. So yeah, then we are gonna continue with Poland. The Polish government started thinking of centralized exchange back in 2021 when a draft bill was issued. Then we had public consultations where we also had the pleasure to participate. Later, the e-invoicing bill was introduced by Parliament by the end of the year. A decree followed which started the voluntary period, which went on from January 2022 and will last till the mandatory introduction of e-invoicing, which is probably going to take place in July in July 2024. The bill on that is currently in the higher chamber of the Polish Parliament, the Senate, and it is going to be voted today. So I hear that there are going to be some remarks, but the main idea, the introduction of a centralized exchange, is accepted by all political parties, which happens quite rarely, especially in Poland, and means kind of shows us how important this topic is to the government to get more control. Again, we're going to oversimplify. The process seems to be super simple if you take into consideration the high-level structure only. So there is an API connection to the central platform called XEF, where you issue the invoice and the recipient can download the invoice on the other side, basically. So it looks quite simple, but it isn't. One nuance, for example, is the so-called XEF ID, the XEF number, which is assigned to each invoice which was sent to the platform and validated properly. And the interesting thing is that what you send to the platform is actually a not yet invoice. So only once the document gets the number assigned, it becomes an invoice. In theory, you do not have to store the XEF ID, but this only applies in theory. Obviously, you need it for other processes, such as, for example, the correction invoice. So there is no way around storing the XEF ID and using it in further processes, despite the fact that the law actually doesn't make it mandatory to archive it, because the platform also acts as a archive free of charge. The invoices are stored in the Polish platform for 10 years. However, we see a clear trend that the taxpayers are not completely trusting this solution and want to have their own archive, which is probably understandable. Okay, moving on to the next slide. So this is the timeline set out by the draft law, which is going to be voted today. Those deadlines are probably not going to change. They already changed numerous times, but this seems to be final. So during the discussions in the Polish Parliament, the only voice was basically, why so late? Not let's postpone, why so late? So I don't expect, unless anything surprising happens, I don't expect the mandate to be pushed back again, which means that the use of the Polish platform will become mandatory as of July 2024. When it comes to other features, they are going to be introduced a bit later. For example, as of January 2025, issuing so-called receipts with the tax ID, which are a thing in Poland, will not longer be considered an e-invoice. So basically, the simplified invoices below 450 zloty will not longer be an invoice. All invoices will have to go through the platform. Also, as of January 2025, cash registers will no longer be able to issue invoices. So this also have to be taken into consideration, despite the fact that P2C invoices are actually out of scope. However, they weren't out of scope in the first draft, which might mean that in the future B2C will also be somehow covered by the mandate, probably not in the form of a clearance system, but more of a reporting system. This is why the platform would have to have some adjustments maybe. And the idea is to have a gradual implementation always. So it only makes sense to start with B2B only. So summing up the obligation, all e-invoicing activities, all transactions subject to VAT in Poland, both B2B and B2G are going to be subject to the mandate. There are some minor exceptions, but they are really minor exceptions. So, for example, airline tickets and train tickets will probably be out of scope. B2C, as already mentioned, out of scope. And what is very important, I'm kind of running out of time, so I'm going to make it a bit quicker. The so-called offline mode was defined in the newest draft. And the offline mode is something which is a bit worrying because it is being applied whenever there is a interruption in the system. So either planned interruptions or unplanned interruptions. In those cases, we are going to have to issue the invoices outside of the Polish platform, and the requirement will be that the system will turn into kind of a reporting mechanism. So you issue the invoices outside the platform, and later on you have to report it. Important, you have to apply a QR code to any invoice used outside of the platform. So those invoices will have to have a QR code, which will enable to check it later on. There are different deadlines depending on whether the fault is on the taxpayer side or if the outage is communicated by the government. What is also worrying, the penalties. So during the public consultations, we tried to convince the government that this is not a good idea, but despite some minor changes, they are still in the draft, which means that as of January, there is going to be a 6-month-long grace period. As of January, the penalties will apply, and they are quite high, as you can see. So a fine up to 100% of the amount of the tax indicated on the invoice. This is a really high penalty, at least in my eyes. So since we're running out of time, I would suggest that we should move to the Q&A session. If I can hand over to Katja.
Yes, thank you everybody for today, first of all. And then I can see there's a lot of questions, and I saw that Ellen kindly replied to some people already in the chat. Thank you, Ellen. But let's start with the first one and see how long we can go. The first question is, how much time is usually needed for C2C implementation, so centralized transaction?
I think
Rafa, you were talking about implementation.
It's always a case-by-case approach. It depends heavily on what kind of invoicing / e-reporting model is being introduced, how complex it is. We've seen cases where we managed to implement a solution in around a month, but this was like super extreme. I would suggest the longer the better. However, 3 to 4 months should be sufficient, but it's going to be a bit tight if the landscape is complex. So I would definitely recommend the longer the better.
Okay, yeah, my experience is the same. And okay, thank you. And let's go to the next question so we have more time. Will e-invoicing replace SAFTI reporting? I think
I can perhaps try to answer that one. So will it replace some of the existing reporting obligations? Definitely yes. If you look at the situation in Italy nowadays, where the information that is being exchanged over SDI is already being used as part of a pre-filled VAT return, you see that it is clearly on the longer term, I would say, making some of the existing typical VAT reporting obligations a bit, no longer required, let's say. However, if you look at the nature of SAFTI, that of course goes beyond the pure transactional information. So you see that with SAFTI, governments are not only interested in the transaction by transaction reporting, but also, for instance, by how you have treated those transactions as part of your overall accounting. So in this sense, I'm not really convinced that SAFTI or that e-invoicing will completely make the SAFTI reporting no longer required or make really replace it. But definitely it will replace some of the existing compliance obligations in the VAT front. And that's also what we see happening in, for instance, countries like Romania that are now at this point in time going through a simultaneous implementation of SAFTI, but also of e-invoicing. So you see that both elements go hand in hand. And again, that has purely to do with the fact that SAFTI is not purely of a transactional nature and is not only focusing on VAT type of reporting, but is also having a broader impact on your accounting, on your direct tax position. I hope that answers the question, Katja.
Yes, thank you very much. It is indeed. I don't know if we have time for one more question because I see that people are starting to leave. So I guess that will be all for today. And we will make sure to send everybody the questions. So we're going to collect everything that's left from the chat and send it to everyone. Thank you for participating. Thank you to our speakers. You guys were wonderful. And to everybody in the chat for being so active. That was great and very interactive. And we're looking forward to seeing you in the future again. And if you have any questions, feel free to contact any of us either on LinkedIn or we're going to provide you contact. So please do that.
Thank you all.
Thank
Bye-bye.
you.
Thank you very much.